Imagine waking up one morning to find out the U.S. government is shut down. The Bureau of Labor Statistics, the very agency that reports our nation's job numbers, has stopped releasing data. No updates. No transparency. Just silence. Sounds like the start of a dystopian movie, right? Well, this isn't fiction. It's happening right now. When the economy shakes, the first place we look is the data. But this month, America's most trusted window into the job market just went dark. The Bureau of Labor Statistics, the same agency that releases the monthly jobs report used by Wall Street, the White House, and the Federal Reserve, has gone silent. No data. No report. No clarity. For the first time in years, the entire labor market, 167 million American workers, has become a mystery. It's like flying blind through a storm with no instruments. Because the Fed depends on these numbers to decide whether to raise rates, pause, or pivot. Without them, it's guesswork, and guesswork at this level can move trillions of dollars. So, how do we know what's really happening to America's workforce? Simple. We turn to the private sector, the companies and data firms still collecting the numbers that Washington isn't. But fair warning. The picture they're painting right now is terrifying. The Challenger Report, one of the oldest private trackers of U.S. job cuts, just dropped a bombshell. In October alone, U.S.-based employers announced 153,000 job cuts. That's a 175% increase compared to the same time last year. Let that sink in. We're not talking about a bad month. We're talking about a warning flare, a full-blown red alert. Over 1.9 million job cuts have been announced in just the first 10 months of 2025. That's a 65% jump from last year. And these aren't seasonal layoffs or short-term restructures. These are deep cuts across industries once thought untouchable. Technology, retail, logistics, finance. Even sectors that boomed during the pandemic are bleeding jobs. It's as if the engine that powered America's post-COVID recovery is starting to seize up. You've been with a tech company for 5 years. You've adapted to every new system, every efficiency update, every whispered round of layoffs that came before. You've stayed loyal. You've trained new hires. You've survived. And then, one random morning, your inbox refreshes. Notice of employment termination, effective immediately. Just like that, your badge stops working. Your Slack access disappears. Your career, your identity, evaporates overnight. And you're not alone. Tech layoffs jumped from 5,600 in September to over 33,000 in October. Retail? Up 145%. Warehousing? Up nearly 400% year over year. Those numbers aren't just statistics. They're families, rent payments, college tuition, medical bills, dreams, all on pause. If that doesn't shake you, it should. Because this isn't just another layoff cycle. It's a reset, driven by forces far bigger than any one company. Maybe AI will create more jobs, right? Yeah, try telling that to the 33,000 tech workers who just got replaced by AI writing code faster, cheaper, and without coffee breaks. Welcome to 2025, where your coworker is a bot. And your new job title might be redundant. So what's actually driving all of this? Why are companies cutting so deep, so fast? 4 words. Costs. Automation. Weak demand. Fear. First, cost cutting. Corporate America is slashing expenses to protect profit margins. When borrowing costs rise and revenues flatten, the first line item to go is people. Second, automation. AI isn't the future anymore, it's the present. From copywriting to logistics to customer service, machines are now outperforming human teams, and companies are noticing. Third, a weaker consumer. People are spending less, saving more, and avoiding debt, which sounds good for households, but brutal for businesses built on constant consumption. And finally, inflation. Even with prices cooling, the damage is done. Everything costs more: labor, materials, energy, logistics. When you add it all up, it's not just an economic slowdown. It's a full-on repricing of human labor. And here's the most chilling part: we're in the holiday season. Historically, companies avoid layoffs in Q4 because firing people right before Thanksgiving doesn't exactly scream happy holidays. So if job cuts are already this high now, during the one time of year corporations usually hold back, imagine what happens in January when the corporate gloves come off. This isn't the end of the story. It's the beginning of a reckoning. Because if America's labor engine keeps sputtering, the Fed won't just be fighting inflation anymore. They'll be fighting fear. Then came a twist. The ADP report, another key private indicator, claimed U.S. private payrolls actually rose by 42,000 jobs in October. That shocked analysts who expected job losses. Transportation, utilities, and trade added jobs, but nearly every other category lost them. So what's going on? Simple: we're in a data fog. Jay Powell, the Federal Reserve Chair, said it best. When it's foggy, you slow down. And right now, the economic road ahead is pure fog. With the official jobs data unavailable, the Fed has no clear map, just private reports that contradict each other. Yet, their next major decision is just weeks away. The Fed's December meeting will decide whether to cut interest rates again. Currently, markets show a 68% chance of a quarter-point rate cut. But here's the problem. The Fed's dual mission is to keep inflation stable and maximize employment. Right now, they're failing at both. Inflation is stuck around 3%, still above their 2% target, while the labor market is visibly cracking. So which fire do they put out first? If they cut rates to save jobs, inflation could roar back. If they hold rates steady, unemployment could surge. Either choice risks breaking the system. Inside the Federal Reserve, a quiet war is brewing. Fed Governor Cook argues that saving jobs should be the top priority, urging rate cuts to ease pressure on employers. Meanwhile, President Goolsbee insists that inflation must be crushed first, even if it means short-term pain for workers. Powell? He's caught in the middle, saying everything and nothing. Think about it. The Fed spent nearly 2 years hiking rates to cool inflation. But what did that actually achieve? Housing became unaffordable. Credit card debt hit record highs. Savings rates collapsed. And now, the labor market, the foundation of the American dream, is buckling. Every Fed meeting is broadcast like a Hollywood premiere: fancy suits, serious faces, big words like quantitative tightening. But behind the curtain, even they're guessing. Because you can't fix decades of economic imbalance by tweaking interest rates a quarter point at a time. Not when technology, debt, and global uncertainty are rewriting the rules faster than any economist can react. Maybe Powell should just ask ChatGPT what to do next. Don't laugh, it might actually give better answers. Here's the truth most people won't tell you. Whether the Fed cuts rates or not, the pain has already begun. We're entering an era where adaptability matters more than security. Where your skill set, investments, and mindset will determine whether you survive or thrive. Because when the old systems break down, new opportunities are born. The signs are clear: job cuts, inflation pressure, and political gridlock. Something big is brewing. And when it hits, it won't just reshape the labor market, it could redefine how Americans work, earn, and live. The question is, are you ready for that world? The American labor market is cracking, but cracks are how the light gets in. This isn't the time to panic. It's the time to prepare. Build new skills. Diversify your income. Stay informed. Because when others are frozen in fear, opportunity belongs to those who act. If you found this breakdown helpful, subscribe, stay tuned, and join me next time when we uncover how AI and automation are quietly rewriting the future of work faster than anyone expected. Stay smart, stay free, and stay ahead.